Welcome to Business Studies for SS1 at Light Tech Academy. Today we study financial markets, money and capital. What are financial markets? Financial markets are markets where funds, money, are transferred from those who have surplus funds, savers and investors, to those who need funds, borrowers and businesses. Financial markets facilitate the efficient allocation of resources in the economy, directing money to its most productive uses. The two main financial markets. Financial markets are broadly divided into 1. The money market, for short-term funds. 2. The capital market, for long-term funds. 1. The money market. The money market is a financial market where short-term financial instruments, with maturity of less than 1 year, are traded. It is used by governments, banks, financial institutions, and large corporations to manage their short-term liquidity needs. Key instruments of the money market. A. Treasury bills, T-bills, short-term debt instruments issued by the federal government of Nigeria through the Central Bank of Nigeria, CBN, to raise short-term funds. Maturity, 91 days, 182 days, or 364 days. Sold at a discount, below face value, and redeemed at face value. The difference is the investor's return. Safest money market instrument, backed by government. Actively traded in the Nigerian money market. B. Commercial paper, CP, short-term unsecured promissory notes issued by large creditworthy companies to raise short-term funds directly from investors. Maturity, typically 1 to 270 days. Higher yield than T-bills but higher risk or not government-backed. C. Banker's acceptance, a bank's guarantee to pay a specified amount on a specified date. Used in trade finance, particularly for international trade. The bank accepts, guarantees, the bill, making it highly marketable. D. Core money / interbank lending, banks lend to each other overnight or for very short periods, a few days, to manage their reserve requirements. The interbank core money market in Nigeria is an important component of the money market. CBN regulates through the Standing Lending Facility, SLF, and Standing Deposit Facility, SDF. E. Certificates of deposit, CDs, fixed-term deposits issued by banks, which can be traded in the money market. Higher interest than regular savings accounts. F. Repurchase agreements, repos, short-term agreements where the CBN or banks sell securities and agree to buy them back at a higher price, effectively a short-term secured loan. Used by CBN for open market operations, managing money supply. Functions of the money market. 1. Provides short-term liquidity, allows banks, businesses, and government to meet short-term cash needs. 2. Government borrowing, government raises short-term funds through T-bills. 3. Monetary policy implementation, CBN uses open market operations, buying and selling T-bills and repos, to control money supply and interest rates. 4. Safe investment avenue, investors can earn returns on short-term idle funds. 5. Interbank lending, banks balance their reserves through interbank lending. 2. The capital market. The capital market is a financial market where long-term financial instruments, with maturity of more than 1 year, or no fixed maturity, are traded. It is used by businesses and governments to raise long-term capital for investment and development. Components of the capital market. A. Primary market, where new securities are issued for the first time. Companies, or government, sell securities directly to investors. Methods include IPO, initial public offering, rights issue, new shares offered to existing shareholders, offer for sale, existing shares sold to public via an issuing house, private placement, securities sold directly to selected investors without public offer. B. Secondary market, where existing securities are traded between investors. The Nigerian Exchange Group, NGX, is Nigeria's secondary capital market for equities. The NGX also lists bonds. The CBN OTC, over-the-counter, FX market handles foreign exchange. Instruments of the capital market. A. Equity, ordinary shares ownership units in companies, traded on the NGX. B. Preference shares, fixed dividend shares, also traded on the NGX. C. Corporate bonds/debentures, long-term debt instruments issued by companies. D. Government bonds, FGN bonds, long-term debt issued by the Federal Government of Nigeria through the Debt Management Office, DMO. Terms, typically 2, 3, 5, 7, 10, 20, 30 years. Pay semi-annual coupon, interest. Very safe, backed by government. Listed on the NGX debt market. E. Sukuk, Islamic bonds used to raise capital from Islamic finance markets. Nigeria has issued sovereign sukuk for infrastructure projects. F. Mortgage-backed securities, securities backed by mortgage loans. G. Infrastructure bonds, bonds issued for infrastructure development projects. Functions of the capital market. 1. Mobilizes long-term savings, channels savings from households into long-term investment. 2. Provides long-term capital to businesses, companies issue shares and bonds to fund growth. 3. Promotes economic development, capital market financing of businesses creates jobs, increases production, and grows the economy. 4. Government financing, government issues bonds to fund infrastructure and budget deficits. 5. Provides investment opportunities, investors can build wealth through capital gains, shares increasing in value, and income, dividends and bond interest. 6. Corporate governance, listed companies must disclose financial information, promotes transparency. 7. Price discovery, market prices reflect all available information about companies, allows efficient pricing. Regulation of Nigeria's financial markets. Central Bank of Nigeria, CBN regulates banks, monetary policy, money market. Securities and Exchange Commission, SSCE regulates the capital market, equity and bond markets. National Insurance Commission, NECO regulates insurance companies. National Pension Commission, PENCOM regulates pension funds. Central Bank of Nigeria also issues guidelines for foreign exchange market, CBN FX market. Differences between money market and capital market. Period. Money market equals short term, less than 1 year, capital market equals long term, more than 1 year. Instruments, money market equals T-bills, commercial paper, call money, capital market equals shares, bonds, debentures. Purpose, money market equals short-term liquidity, capital market equals long-term investment. Risk, money market equals lower risk, capital market equals higher risk, but higher potential return. Participants, money market equals banks, government, large corporations, capital market equals companies, government, individual investors, institutional investors. Regulatory authority, money market equals CBN, capital market equals SEC, with CBN for bonds. Remember, financial markets equals markets where funds are transferred from those with surplus, savers/investors, to those who need funds, borrowers/businesses, equals facilitate efficient allocation of resources. Two main markets, money market, short-term equals less than 1 year, plus capital market, long-term equals more than 1 year. Money market, short-term instruments, treasury bills, T-bills equals federal government via CBN equals maturity 91 plus 182 plus 364 days equals sold at discount plus redeemed at face value equals safest equals government backed, plus commercial paper, large companies equals unsecured equals 1-270 days equals higher yield plus higher risk than T-bills, plus bankers' acceptance, bank guarantee to pay equals used in international trade finance, plus call money/interbank lending, banks lend overnight/short periods equals manage reserve requirements, plus certificates of deposit, fixed-term bank deposits equals tradable, plus repos/repurchase agreements, sell securities plus agree to buy back equals CBN open market operations equals control money supply functions of money market, short-term liquidity plus government borrowing plus CBN monetary policy, open market operations equals control money supply, plus safe investment for idle funds plus interbank reserve management, capital market, long-term instruments, components, primary market, new securities issued for first time equals IPO plus rights issue plus offer for sale plus private placement secondary market. Existing securities traded between investors equals NGX instruments, equity/ordinary shares, traded on NGX, plus preference shares plus corporate bonds/debentures plus government bonds/FGN bonds, DMO equals 2-30 years equals semi. Annual coupon equals very safe, plus Sukuk, Islamic bonds, plus infrastructure bonds, functions of capital market, mobilizers long-term savings plus long-term capital for businesses, shares plus bonds for growth, plus economic development, jobs plus production, plus government financing, bonds for infrastructure plus budget deficits, plus investment opportunities, capital gains plus dividends plus bond interest, plus corporate governance plus price discovery, regulation, CBN, banks plus monetary policy plus money market, plus SEC, capital market equals equity plus bonds, plus NECOM, insurance, plus PENCOM, pension funds money market versus capital market, period, less than 1 year versus more than 1 year, plus instruments, T-bills plus commercial paper versus shares plus bonds, plus purpose, short-term liquidity versus long-term investment, plus risk, lower versus higher, plus regulatory authority, CBN versus SEC. Thank you and keep excelling at LightTech Academy, powered by LightTech Solutions Limited.